Generally speaking, in the past, I would have broader portfolios and shorter time horizons. My short-term time horizons, because we're trading economic data, might be 2 months to 6 months, and sometimes I do shorter-term bets. But now we've got two megatrends, the biggest secular trends we've ever had, that all you need to do is capture the trend. Part of your portfolio, the largest part, should be in capturing these long-term trends. They're easy, you don't need to do anything. But I know people like to trade, it makes them feel good, gives them some adrenaline, so do that with a smaller amount, and then write down whether your returns are actually beating your benchmark. Chances are they won't.
Raoul starts by pointing out a harsh reality. Governments around the world are debasing their currencies by about 8% a year. That means every year your money loses value. And this silent theft explains why house prices, stocks, and scarce assets keep going up while your wages stay flat. You're not buying less because you're lazy or unproductive. You're buying less because the system is designed that way. Your salary stays still, but the denominator, the currency, keeps shrinking. That's why scarce assets outperform wages and why the rich who own assets keep getting richer.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The problem is the governments around the world debasing currency by about 8% a year. That is basically why house prices get more expensive, but your wages don't. Wages don't go up, scarce assets do. That's why the stock market goes up, but your wages don't, so you're buying less of a share of all of this stuff. The problem is the S&P 500 has a load of shitty dead companies in it as well. And so it's really doing about 11, 12, 13% a year. And you've got 3% inflation just on your food and stuff. So you've got like 11% hurdle rate. So you're actually not getting any richer by owning the S&P 500. So your future self is going to look back at you and say, you moron, you did this to me? So NASDAQ does about 17, 18%, and Bitcoin does about 145. Okay. That tells you what your future self is going to thank you for. In exchange, you will get more volatility. These things are more volatile. But I was thinking back at something we were talking about before, is, okay, let's say you want a shorter term trade. I'm not talking ultra short term. I'm talking about taking the trade that could last a week to 3 months, right? Mm-hmm. One of the biggest advantage hedge fund traders have now is they work for large firms of which they're surrounded by other traders who are filtering ideas and talking about it and exchanging ideas. So what you've got is a filtration system of ideas, and you learn from each other, and those people become better at what they do. What most people do is they don't select the people that they talk to all day in this, right? You are who you surround yourself by. So finding the right trading community and ideas, the higher quality you get, the better chances you will have, and you will all have, of succeeding. When I approach the world of macro is just looking at global opportunity sets in any asset, anywhere in the world, that makes you the most returns. That's really what we do. But we use economics to understand how the world works, because things like the business cycle drive returns of assets. So we use that framework, and then we look at the assets that work. Generally speaking, in the past, I would have broader portfolios and shorter time horizons. My short-term time horizons, because we're trading economic data, might be 2 months to 6 months, and sometimes I do shorter-term bets. But now we've got two megatrends, the biggest secular trends we've ever had, and we'll talk about why they are as they are, but they're so powerful that all you need to do is capture the trend. So it makes it easy, because trading's actually hard. It's a really hard thing to do. And when you've got a huge trend that just does this over time, capture the bulk of that. So what I think for people to do is have two things in your head. One is put some of your capital in the long-term trend and just let it play out. Then you can try and see if you can add alpha versus that trend by trading. I guarantee you won't. That's the hard thing to realize. The trend is, like in crypto, is so powerful that it even becomes difficult to start a business if you've got any capital, because the returns are so high. We've never had this before. It's the easiest and best way to kind of unfuck your future is having a mega trend behind you. Most other things we trade are cyclical. Whether it's the dollar or rates or equities, different. Technology, definitely not. It's a secular uptrend because tomorrow's more digital than today. So focus on part of your portfolio, the largest part, should be in capturing these long-term trends. They're easy. You don't need to do anything. But I know people like to trade. It makes them feel good, gives them some adrenaline. So do that with a smaller amount and then write down whether your returns are actually beating your benchmark. Chances are they won't. So when I talk about a long-term trend, well, the probability of it going up tomorrow versus today is higher, which is much better than if you're trading a short-term chart, which could be moving around. So your probability goes up. That's all it is. And you have to understand that the probability of trading is, most of the best traders in a shorter term time horizon will be at best 50-something%. So that means most of the time you're going to feel like a moron. And that's okay as long as you understand why. Some trades just don't work, Just because the probability is 80% in your favor, it can still fall the other way. But if you're making mistakes because you don't know what you're doing, you don't know why you're doing it, you're not reading the charts right, you're not stepping stop losses right, or however you're doing your trading methodology, if you're not learning from that, then you're destined to fail. But as you say, if you get into a trade, your first trade, you do it big, you get 3 or 4 winners, you don't realize the probabilities are still that you're going to have some losers. And if you then start putting your ego into the trade, it's the whole behavioral aspect of trading that's really hard. Bit of magic that most people don't realize until they do. The year-on-year rate of change of every single financial asset is the same as the ISM Institute of Supply Managers survey. And when you do the year-on-year rate of change, they're all identical. They all do this. So it tells you when the business cycle picks up, the year-on-year rate of change of oil, equities, the dollar, everything picks up. Okay, that's super interesting. So this one thing moves everything. And then you look at what moves that thing. And it's all driven by liquidity. And so we can look at liquidity and it leads it. And then we have other indicators like financial conditions that lead all of that. Right now, gold is leading Bitcoin by a year and the business cycle by a year because it's living in financial conditions world. We call it the business cycle dominoes. And all of these things kind of have a lead and lag. A lot of people are focusing on unemployment and they're too bearish because unemployment's the most lagging thing. And then after that is housing. So those really lag. Financial conditions is right into the future, 9 months at least. And Bitcoin and gold is out there now. It moves around a bit, but that's where it is. So it's kind of giving you a roadmap of where we're going. So it's using the business cycle elements, looking at the leads, and you'll see on Twitter and other places and on Real Vision itself, there's several people who've constructed like Global M2 or Total Global Liquidity based on our work at GMI. And so that's available to get on TradingView, stuff like that. And it's a superpower because now I'm like, oh, if I use this and this, it tells me the business cycle is going to pick up and I want to be buying stocks. Where are we in that? Mm-hmm. What happens next? And you'll also find that stuff like technology tends to be a little bit advanced. And so a lot of people have been starting to think about calling the low in oil. And that should happen as the business cycle gets up. Why? Because people buy more oil. Crypto accelerates as the business cycle goes up. So we ain't seen nothing yet. Why? Because more people have more money to use block space for stuff. So all economic activity picks up, whether it's in blockchain world, crypto land, or whether it's in the real world. So then you can trade commodities easily because you get real price actions. Things start to accelerate. Copper starts to accelerate. So it's so useful as a framework because you know what to trade and when. And you know how long it'll last. And you've got forward-looking indicators. It's like having, well, that's what I call the everything code. Mm-hmm. Mine goes out further because of demographics and everything else. So I put together this gigantic whole how the world works based on all of this stuff, from demographics through to financial conditions, debt, super cycles, the whole lot, into where are we today? Mm-hmm. And the everything code is, I never thought it would be this amazing, and it's been incredible.
Raoul emphasizes the importance of learning from mistakes, not from wins. Gen Z and millennials often jump into trading without understanding it. They want the ticker, not the thesis. And that's okay, he says, as long as they learn from their losses. In fact, it's often better to lose money first, because early success can breed arrogance and lead to catastrophic mistakes later. Every trader's journey involves ego, risk, and humility. The faster you learn that, the faster you evolve. He also believes in the power of collective intelligence, that a motivated, smart crowd can outperform individual experts.
I got to a point, because of AI and robotics, that I can't see beyond about 2030, 2032. And that's unusual for me, because I use megatrends as the backdrop to what I look at, things like demographics. So when you look at demographics, the population is aging pretty much in every major developed country in the world. So that means that economic growth slows as people get older. So GDP growth is driven by population growth, productivity growth, and debt growth. So as population ages, you get these big megatrends that start affecting growth rates of things, and we offset it versus debt. So we've got these megatrends. We've been debasing currency, printing money to kind of offset this massive debt because of the aging population that's slowing growth, and the governments try and keep growth up by creating debt. But soon we're going to replace that equation, because the population side is going to be replaced by AI and robots. So we can have infinite number of productive units population in the next 10 years. So what does that do to economic growth? Who does it accrue to? But we get even weirder outcomes than that. Is, obviously people like, what job am I going to do? What's the point of a trader when you've got an AGI that can do it better? What edge do you ever have? How do companies get priced in markets once you've got this super intelligence? Because don't forget, for the first time in all of history, we will not be the super being on the planet. Somebody will be much smarter than us. It'll be the AI. So it's going to be better at us at all of these mental tasks that we do, and faster than us. So it becomes a strange world where I don't think trading works. I don't know what investing is like. We don't know what jobs we're going to do. But we're going to have massive economic growth. And I do know that we're very adaptive as a species. We'll figure stuff. And we'll figure stuff in ways of making money, ways of being human, and stuff like that. But we don't know what that is. If I know that we're about to go through the largest change humanity has ever gone through in the shortest period of time, i.e. not being the apex of all intelligence, well, it's a mind-blowing concept. And you can create infinite amounts of these super brains or super bodies. It's like the only way to really prepare for that is to not care. And the only way to not care really is to have made enough money that your security, you allow yourself to be secure, and then you can enter that world because you can take risks, you can learn, do different things. But if you're expecting to be doing what you're doing today in 10 years' time, you're so wrong. And so really I've looked at this and said, okay, we've got these massive megatrends, crypto, technology. They go up over time. They're the fastest, crypto particularly is the fastest growing asset in terms of performance in all human history in the shortest period of time. So don't fuck this up. Take that opportunity and use it, because if not, you're going to regret it. So I always talk a bit about your future self, and will your future self thank you for what you do today? You're trying to set your future self up to be protected from the new world that comes. Because I've seen a lot of Gen Z and the millennials when they started trading, which was only back in 2020. Before then, they didn't trade at all, right? Non-financialized, is they've approached it in a different way. So it's not for me to say, because we're all going to learn the lessons we have to learn in the way we have to learn them. My age group tended to learn via reading, understanding first, and then put it into action cautiously. The Gen Z generation is the most extreme of all, which is show me the trade, I don't know what it is, show me the ticker, and I'll buy it. And then I'll figure it out as I go. And I don't mind whatever way you get in, as long as you learn and you realize that you're going to make mistakes, because trading is all about learning from your mistakes. It's rarely ever learning from your winners. It's like, where did I go wrong? What did I do? Most of the time it's because you've done something dumb, like listen to your friend and they said, hey, buy this. You buy it, you have no reason why, you don't understand. But as long as afterwards you go, well, why did I do that? Why did I lose money? Then you're starting to learn. So it doesn't matter whether you come the slow way, watching Real Vision, watching every interview, trying to understand how to trade, what is it like to invest, or you just throw yourself in the deep end, lose money. The worst thing is actually when you make money too quickly in the process, because you start to think you know everything. And what you start to do is start taking outsized risks. And I've seen many, many people blow up from doing that by, it's better to lose money first than it is to make money first. Average people didn't get the same idea as hedge funds. And I realized hedge fund people have an ego. So I'm like, and they're friends of mine. So I'm like, why didn't I just interview them like this and get them to spill the alpha? Mm-hmm. And they did. And everyone was, oh my God, I get this information now.
I know.
Right. So now we dropped all of that information. But now I think that the crowd is smarter than the individual. And a smart crowd, motivated, will probably outperform most experts. So I think there's a lot to that whole broader concept of community and finding the right information, because your signal rate's going to be higher, because you've got a bunch of smart people saying this is my best trade idea. Mm-hmm. And you get to look at all of those trade ideas and choose which you think the best one is using your methodology. Of course, it's like pyramiding up the value system. So we have an expression in crypto which is called FUD, fear, uncertainty, doubt. Mm-hmm. And crypto's always been full of that, because people don't understand it, fear it, and then they get jealous of the returns, and then they become... So Tether, at one point, had an issue because there were some issues with one of the exchanges getting hacked, etc. And so at one point, I believe they made a loan to Bitfinex, which was the exchange. And that loan was put down as an asset on the balance sheet. Okay. Eventually, it all got paid off. So I think there was a period of time when there was actually a real problem. But we're talking 2017, 18. And since then, it has been stress tested by everybody. It's a giant asset. Tether's moving to the US, different variations of it. The reality is Tether is the dollar stablecoin rails for the non-developed world, the non-developed world. That's basically it. I think it's used for capital flight from China through to trade between like Malaysia and Indonesia or whatever it may be, South America. So it's massively used. I mean, Howard Lutnick will say, the Trade and Commerce Secretary of the United States will say, well, they were the largest client of Cantor for buying government bonds. Mm-hmm. The US knows how many bonds they have. So no, it's not an issue anymore. There was something went wrong in the past, and I think they sorted it out. And then ever since then, it's just been FUD.
Raoul touches on Tether, one of the most misunderstood assets in crypto. Yes, there were early issues around 2017-2018 with loans to Bitfinex, but those were resolved. Since then, Tether has become a massive global infrastructure layer, especially for the developing world. It's not just a trading tool, it's a financial lifeline for people in countries where the dollar isn't easily accessible. Today, Tether is one of the largest holders of U.S. government bonds. Even American financial authorities acknowledge its scale and legitimacy. So as Raoul puts it, most of the current criticism is just FUD, fear, uncertainty, and doubt.